Welcome everyone. Welcome to the budget planning and controlling session of Actioneering 3.0. Before we start our session about budgeting, there's something I need to clarify to you guys, and that is this session is actually not going to be some accounting session. I'm actually going to be talking to you guys about budgeting in ISEC, what kind of budgets we make in ISEC, and how to make a proper budget for an event or a project. So before we go into that details, let's first take a look at what is a budget. So budget is actually one of the most important financial documents of any entity or any organization, because a budget actually sets the path for an organization. It has inputs from pretty much every function that is related to that organization. So if you take a look at a budget, you could actually if you look at the budget, you could actually understand where that organization is heading and what kind of activities that organization is carrying out. So why do we make budgets? Actually, we make budgets to control operations of an entity. So can somebody tell me what are the kind of operations that we carry out in ISEC as an entity? Can someone turn on their mic and give an answer? If you guys are not answering, let's pick someone. Gachani, can you tell me what kind of operations we carry out in ISEC? Gajani? Okay, so the next time, guys, make sure to turn on your mics and answer. The kind of operations we carry out in ISEC are we do exchanges, and we have LC events, and we raise partnerships, and we have development and recognition for members. So those are the kind of operations we carry out in ISEC as an entity. So how does a budget help you control operations of an entity? So one way you can use a budget to control operations is by evaluating budgeted amounts with actual amounts. And by doing that, you can proceed to authorize expenses only if there's enough revenue to compensate for that expense. And also you can find out alternate revenue streams to increase your revenue. So all that decisions you can make by taking a look at a budget. So for an example, I have used here the term budget. You guys may not have heard about the term budget before. A term budget is actually a budget that we make for the whole term of an ISEC entity. As soon as an executive board is elected, they make this term budget for their upcoming term. So this snapshot here is actually a screenshot of the term budget of 1920 term. That was a previous term. So in this image, you can actually see the income budget for the term. But if you look closely down under, you can see there's a sheet for the cost budget. And there's a weekly budget, there's an exchange breakdown, there's a sheet for the cash flow. So if you come into the EB level, you will also get your hands on this term budget. So this term budget is actually what sets the path for the whole term of that ISEC entity. We have inputs from each and every function in this budget. Every LCVP in an executive board contributes to making this budget. You can see in this image also there's function IGV, IGE, IGT, and so on. And if you scroll down through this sheet, you can also see the back office functions such as marketing and BD and so on. So the same way, there's a cost budget which includes inputs from each and every function in ISEC. So like I told you before, we can use a budget to control operations of an entity. So how do you do that? So you can clearly see here, for an example, we will take a function IGV. If you can see, if you can clearly see my screen, you can see that for the month of May, we have set a target income of 128,500 rupees for function IGB. So we set that target by evaluating the amount of exchanges we can do during that month. So after setting that target revenue, we evaluate the kind of costs that we can make in the month of May and the amount of expenses we can do in the month of May. So based on those targets, we can plan our operations, we can plan our activities. So let's say that you set these income and expense targets for this particular month, but when you actually arrive at that month, you realize that you actually can't achieve that set revenue income. So what do you do in that case? Well, in that case, based on the actual amount of revenue that you can generate, you can reduce your costs. You can replan your expenses. You can cut off unnecessary expenses. So that is how, based on budgeted and actual amounts, we can plan our operations and activities. So we'll move on to the next slide. Yeah. So the term budget is actually not the only budget we make in ISEC. There are several types of other budgets that we make in ISEC, especially you guys as members. When you are elected as OCVPs, you will be making budgets for your operations. IGV members may know this, that you have to create a project budget for each of your projects. And also we have IGV events. For IGV events also, you have to create separate budgets. And then we have LC events. So as soon as an organizing committee is selected for an LC event, they also have to create separate budgets for their events. So there's something that I forgot to tell you guys before, that is this term budget is actually not a fixed budget, because every month we have to revise this budget and submit a revised monthly budget to the MC. So like I told you before, when we are making the term budget, we take inputs from the LCVPs, but when we are making the monthly budget, we are taking inputs from you guys as members, because members are the ones who run the operations in an entity. So because of that, your contribution is very important to the term budget as well. And that is why when you are making budgets as members in ISEC, you have to do it right. So like I showed you before, there are 6 steps to budgeting. So actually, these steps are not set standards in accounting as far as I'm concerned. These are actually steps that have been implemented by Global Finance Board, or the GFB. So you guys may not have heard about GFB. You can quickly search on Google and get more information about GFB. GFB is actually an independent body of ISEC. So it was situated in the year of 2012. And what they do is they do the financial control of ISEC. Their sole purpose is to improve the transparency in financial control and reporting in ISEC. So they have imposed 6 steps to budgeting that we can use as ISECers. So those 6 steps are, as you can see on the screen, there's planning, draft income budget, draft expense budget, review draft budget, approve budget, and the last one is implementing the budget. So I won't be going into theory about these steps. So instead, I thought of getting a real example of a budget and review it with you guys to see how we can utilize these 6 steps. Yeah, so let's review a budget. So this budget is actually from LDS 7.0. That is Leadership Development Seminar from the previous year. Most of you guys may have even been there. The OCP for this event was Punsara. And the OCP finance was Diniti, whom I think is here with us today. So you can see that this is actually a standard template of a budget. There's an income section, there's an expenses section, and there are 4 columns in each section. There's description, budgeted, actual, and variance. So you guys may be wondering, how do you arrive at this description section? How do you know what kind of expenses and what kind of income streams that you will be using in any operation or an event or a project, whatever it is? So that is where the planning step comes in, because in planning step there are several things that you can carry out in order to find out what type of expenses and what type of income streams you will be using. So one thing you can do in the planning step is taking a look at data from the previous year. That is one thing that a lot of people tend to overlook even, but it is actually very important and it is very helpful. So for an example, if you are making the budget for LDS 8.0, you can take a look at this budget, LDS 7.0 budget. So you can see here in this budget, there are several types of expenses and there are several types of income streams. So if you are closely looking at the previous year's budget, you will see that they have actually made same type of expenses, and you can get an idea as to what type of expenses you will be making this year. But that is just to get an idea. Don't always stick to the data from the previous year. For an example, when you are putting these budgeted amounts here, don't always stick to the actual numbers from the previous year, because that was a whole year ago. Those numbers could be vastly different this year. For an example, let's take the whole. So we can assume that they have made an actual expense of 60,000 rupees for the whole. So let's say in your budget also, you put the budgeted expense for the whole as 60,000. But let's say because of a number of reasons, the owners of the venue have increased the expense of the whole to 70,000. So now your budgeted expense is 60,000, but when you are actually making the expense, you find out it is actually 70,000. So that leaves you with a variance of negative 10,000. So that is a huge amount. So based on these expenses, you have already set your income targets and you don't have enough income to compensate for a negative variance of 10,000. So that 10,000 is totally enough to turn your event into a loss-making event. So that is why when you are making your budget, don't always stick to the numbers from the previous year. You can, to find out actual numbers, you can do a market research. So that is another thing you can do in the planning step. If you have just called the owners of the venue and asked them for the real price, you would have known that it is actually 70,000 this year. So you would have put the budgeted expense as 70,000. And that would have left you with a variance of 0. So you would have set your income targets based on that 70,000. So you wouldn't be doing a loss event. You will actually be breaking even or even generating a profit if you knew that the cost of the whole was 70,000. So that is why it is important to do a market research when you are putting these budgeted amounts, because by doing a market research, you can reduce the variance as much as possible. And that is actually a good trait of a budget. The variance should be as little as possible, especially the negative variance. You shouldn't have huge negative variances in a good budget. So now that we have done the planning stage, we can arrive at the next 2 steps. You can draft the income budget, you can draft the expense budget. So when you're drafting income and expense budget, you can either first draft the expense budget, and based on that you can set your income targets, or you can first draft the income budget, and based on that you can plan your expenses. So based on the situation, based on your operation or activity, you can do it either way. For an example, when it comes to exchanges, we can forecast how many exchanges we are going to do in a particular month. So based on that, we can set our revenue targets, and based on the revenue targets, we can plan our expenses. But for an LC events, most of the times what we do is we first plan our expenses, and based on that, we set an income target. So it can be either way. You can do it either way. So after you have drafted these two budgets, you have to get them into a single sheet, like you see in the screen, and make a draft budget. So in our fourth step, we review this draft budget. So how do you review the draft budget? Actually, reviewing means actually sitting down with your team, your OC, and talk about this budget. Come up with creative new ways to raise your income. Come up with creative new revenue streams, and come up with ways to reduce your cost, and find out what kind of costs that you can cut off, and find out what kind of new expenses that you will be making. So that is reviewing a budget. So when you are reviewing a budget, you should take inputs from your team, and you can take inputs from the EB, and sometimes you can take inputs from outsiders who have expertise. So that is reviewing the budget. So after reviewing the budget, you have to create a revised budget. And after creating the final revised budget, you have to submit it to the EB. So that comes in the fifth stage, approve the budget. You have to submit your budget to the EB, and you have to get the approval of the EB before you proceed with that budget. So sometimes the EB submit this budget to the MC for further approval as well. So let's move on to the sixth stage, that is implementing the budget. So in the implementation stage, also there are several things that you can do. In the implementation stage, what you have to do is you have to constantly monitor this budget, and you have to make sure that your actual expenses don't vary from your budgeted expenses. You have to make sure that your actual expenses do not exceed the budgeted expenses. That means your variance should be as positive as possible, or it should be zero. Don't go for negative variances. And you have to make sure that your actual income is not less than the budgeted income. So you can see in this budget, they have far exceeded their budgeted income, and their variance is also, if you can see down here, their aggregated variance is much less than their budgeted total expenses. So that is a good trait of a budget. So after implementing the budget, after you have proceeded with your project or your event, at the end you have to do a variance analysis. So what is a variance analysis? Like I told you, we use this variance column in a budget. We use that column to see how much you have, how much your actual expenses or incomes have varied from the budgeted expenses or income. So in the expenses section, if you see huge negative variances, you have to find out the reasons behind that. You have to find out what went wrong, what you did wrong. And in the income also, if you have little variance, you have to find out what you did wrong. And if you have a good variance, you have to find out what you did right. And you can use those statistics to plan your next operation or your next project better. So after the variance analysis, let's move on to some good practices we can use in budgeting. So like I told you before, these are actually not mandatory. These are some good practices we usually use in budgeting. So one thing is be realistic as much as possible. So people who um, management students may know that there's something called scenario planning. That is, you plan your budget for several scenarios. There's something called best case scenario. There's something called worst case scenario, and we also make a budget for the situation in the middle. So in the best case scenario, what you do is you underestimate your expenses and you overestimate your income. And in the worst case scenario, you underestimate your income and you overestimate your expenses. So my suggestion is don't go for these two scenarios when you are making your event budgets or project budgets. Always try to be realistic as much as possible, because the thing is, if you use the best case scenario budget, you carry the risk of running into losses, because in a best case scenario budget you underestimate your expenses, so you always have the risk of exceeding your targeted expenses, and you overestimate your income in the best case scenario budget, you carry the risk of not achieving your targeted income. So there's always the risk of generating losses. And in a worst case scenario, you underestimate your income and overestimate your expenses. So the problem with that is, for an example, let's say you are doing a project and you set your target income into 500 rupees and you set your target expenses into 400 rupees. By being paying attention to this budget also, you will see that they have actually clearly mentioned their specific expenses and revenue streams. And another thing is plan your budgets in profit. Always plan your budgets in profit, because even though we are a not-for-profit organization, that doesn't mean we have to always break even our budgets, and we don't have to generate losses in our budgets. So always plan your budgets in profit. So there are several budget criteria also that you have to fulfill when you are budgeting. One thing is be consistent with your plan and be focused on your plan. Always create the budget according to the plan that you have created. And your budget should be complete. It has to include all the expenses and all the revenue streams that you will be using in your operation. And your budget should be transparent. Anybody should be able to look at your budget and get a clear idea as to what you did in your activity or project, and what you did wrong and what you did right. So the last one, and one of the most important ones, is to ensure sustainability. So sustainability is actually that means your direct and indirect costs not exceeding your revenue. So ensuring sustainability is very important, because that is a standard that is a standard we have in ISEC. Acting sustainability is one of the standards we have in ISEC, and also in Colombo Central also we don't allow loss-making events or projects. So ensuring sustainability when you're budgeting is very important. So lastly, we have some general rules when it comes to submitting budgets. So like I told you before, you will be making a lot of budgets as members in ISEC. And I told you that once you have made your budget for your project or your event, you have to submit them to the EB for the approval. So there's a few rules that you should be following when you are creating your budget. So like you can see on the screen, if the cash outflow of your event or the project is greater than 25,000 and less than 200,000, that is, if your total expenses is greater than 25,000 and less than 200,000, you should submit that budget 2 months before the starting date of your event or your project for approval. And if the cash outflow of the event is greater than 200,000 and less than 500,000, you should submit that budget 2 months before the event or the project. And if the cash outflow of the event is greater than 500,000, you should submit that budget 3 months before the starting date of your budget or your event. So those are the general rules we have in ISEC when it comes to submitting budgets. So I hope you guys were clear on everything we did so far. So if you have any questions, you can ask right now. You can turn on your mics and ask if you have any questions. Or you can ask in the chat also. Okay, so everyone seems silent. So that seems like you don't have any questions. Okay, since no one has any questions, we will proceed to the Kahoot that once again you have been anticipating. So it's Kahoot
Hello,
time.
hello, okay.
Yeah. Yes,
Do you
Hirusha.
know what is
Tarun.
surplus and deficit means?
Surplus and deficit means in a budget, if your income has exceeded the um, expenses, that is a surplus. And if your expenses have exceeded the income, you get a deficit.
So negative is a
So,
deficit.
yeah.
Ah, okay.